Hello, ladies and gentlemen. Welcome back to the Good Doc Talk Stocks. Of course, I am your host, Doc. Back again, once again, with something interesting. Just a great topic of conversation, and I really want you guys' opinion on this one because at the end of the video, chances are I'm gonna probably get back into one or both of these particular stocks. Again, don't only get the likes up, ladies and gentlemen. Make sure you get your stocks up. This is the only way to play the game, alright? Time in the game is way better than time in the game. Quotes from our man, the Wall Street Trapper. Alright, so with that being said, guys, I got two particular stocks on the chopping block today. Ladies and gentlemen, none other than Pepsi, PEP, versus Coke, KO. I need to know who you got. That's what Doc wants to know. I want to know who you got in your portfolio and why you got them. That's what the comment section below is for. So, we all know Pepsi trading in between about 130 to about 140 as of the recording of this video. They cover a wide range of product brands, guys. Anywhere from Frito-Lay, Lay's, of course Pepsi brands, Gatorade, Lipton. The sky is the limit with the product line that Pepsi is involved in. Quaker Oats, my goodness, the list goes on and on. But I think what is really attractive about Pepsi as a company, it's been increasing dividends for about 48 plus years now. And of course, the ever so attractive dividend payout of about $4.09 annually, which roughly runs about $1.02 and some change quarterly. Very, very, very attractive, and for the price, definitely worth getting into. Now, on the flip side, you got KO, the knockout punch, also known as Coca-Cola, one of my favorite brands to actually partake in and drink. By the way, in today's video, we are on Pepsi. Actually, it's a Diet Pepsi, ironically. It's empty, but that's what the Doc's been kind of drinking on lately. Feel a little guilty because I've been kind of cheating on my own favorite brand, but in reference to what KO has to offer, steady dividend payouts every year. Warren Buffett is invested in them, so of course that's always going to be a great attracting point. A lot of people tend to follow what Buffett does. A lot of us new age investors are kind of sort of just taking his learning lessons and thinking about them a little bit and applying them to what we know, as opposed to just following everything he does. If that's the case, we might as well be in the Berkshire Hathaway ourselves. Not the A, because A is hella expensive, but the B part, Berkshire Hathaway B. And just follow what he does if that's the case in point. Get into those, is that an index fund or an ETF? One of the two. Whatever. Get into whatever Berkshire Hathaway has to offer if that's the case. But for me, I like to look at it from the individual stock standpoint. Coca-Cola trading anywhere between $45 and $50 as of the recording of this video. Relatively attractive dividend payout of about roughly $1.64, I think. I don't think they've raised it yet as of this particular recording of this video. I have to go back and check, but I think it's roughly still about $1.64. So you guys pretty much do your math, divide that by 4, and you'll get an idea of what you're going to get quarterly. Now, of course, looking at both of them, Pepsi, in my opinion, looks like the more attractive play. But overall, if I think about it, the room for growth for either one of these companies, you'll probably get more growth. I'm not saying it's going to be much, but you'll likely get more growth out of Pepsi than you'll probably get from Coca-Cola. Coca-Cola is considered your blue chipper stock, ladies and gentlemen. Slow and steady wins the race. It's just going to always be there. There's nothing you can do about it. Coca-Cola is just one of those companies that will always be there. Granted, it's not going to have a flashy, oh, check me out in my nice little profit run that I'm going up. It's not a growth stock, ladies and gentlemen. It's done damn near all the growth it's going to get. I think at its highest, it was trading in around 60 something. if we get back to 60, that's a blessing, okay? So you're not gonna expect a lot of growth from Coke. Let's just be 100% with ourselves. I'm not expecting a lot of growth from Coke. I am expecting probably more growth from Pepsi than I will Coke, but let's be honest. The growth in Pepsi, the potential can be there, but I'm not really having a high expectation for growth in the Pepsi company. I'm not expecting it to jump $20, $30, $40. I'm not actually predicting, and I'm just saying this out loud, but I'm not thinking that it's going to grow to the point where it's a $200 stock. I think it's going to probably float in and around the 130, 140, maybe if we're lucky, 150 range for the better part of the next 2 to 3 to 5 years for sure. Unless something dramatically happens, that's where I see Pepsi staying. So if you ask yourself, what would probably look the most attractive in my portfolio? I like to utilize something that is weird, but for me it has always worked. I like to look at how many shares I can get from one company in comparison to the other, and also compare the amount of annual dividend I'm going to receive. Because again, when you're investing in these companies, you're investing in them probably for the purpose of a dividend payout, as opposed to the purpose of investing in them because they're fantastic stocks with great potential growth. Okay? You're probably investing in Pepsi and Coke for their dividend payouts. Okay? So let's say, for example, for even number purposes, because I need even numbers to work for me, let's say if Pepsi's trading at 140 flat. Okay, let's say that Coke is trading at 50 flat. How many shares of Coke can you get to equal one share of Pepsi stock in your portfolio? Let's think about it. You'll definitely get about a solid a little over 2.5 shares to equivalent to one share of Pepsi. Again, well, fuck it. Why don't we just round up? We'll say that Pepsi is magically 150. So 3 shares of Coke will give you 1 full share of Pepsi, because I just don't feel like doing the math on that. Okay. So your 1 share of Pepsi is what? Giving you your $4.09 annual. And then, of course, if you get into Coca-Cola, which is trading at $1.64, off the top of my head, I just don't feel like doing the math. So y'all gonna have to sit here and watch me get on my trusty calculator and figure that out. And that's gonna give you, if it's at 164, that's gonna give you roughly $4.92 of annual dividend payout at the payout dividend rate annually of $1.64. So basically you can safely say that 3 shares of Coke will probably be better than 1 share of Pepsi in reference to the annual dividend payout. Now, that's just kind of how I work with it. Now, again, that doesn't mean that I'm ever going to shun or get away from Pepsi. If that's the case, I'm just saying that sometimes I like to look at how many shares I could get per 1 share of one company when I'm trying to realize what kind of dividend payout I'm looking for. Now, that doesn't mean that I overlook company A, which would be Pepsi in this situation, for company B, because I'm able to get more money or more dividends as a result. That just means that I'm willing to sit there and say, okay, this month, depending on what it's trading at, if it's a little bit lower, I'm willing to say, you know what, let me go ahead and slide in about 3 shares of my Coke while, Pepsi's making its run, or while it's going, and then maybe Coke is kind of just leveling out a little bit and it's not really doing anything special. Let's say it drops a little bit and you just feel like, well, it's dropped enough for me to feel like I need to put in another share to dollar cost average down, share or 2 to go ahead and average down, and bam, still get my dividend payouts. That's how you gotta play the game. I'm not gonna lie to you guys. I'm a very conservative investor. I don't really have the funds to put in a lot of money like my mentor and all of my other guys do, where they can throw in 50,000 out of stock, 100,000 out of stock. Don't ask me where this money comes from, because I don't know and I don't ask questions. But I don't have it in me to be able to throw $1,000 at one stock. and say, yo, man, let's see if this pops. You know what I'm saying? This is just a gradual build for me, especially when it comes to dividend payouts, okay? Your growth stocks always so much more riskier because you got to hold, and the only time you're ever going to see any payout is if you actually sell it. So again, on paper, you look good, you look high. Next thing you know, you drop it. All of a sudden, what you thought you once had, you don't have it anymore because it's not tangible. You can't physically touch it. So, you know, in reference to how I feel about Pepsi, in reference to how I feel about Coke, if you were going to add one to your portfolio, comment section down below, ladies and gentlemen, let me know. I know which one I would go for. I made a video about KO before. I haven't touched on Pepsi yet, but personally, thinking about it out loud, I know which ones I would which one of the two, if I had to choose just one, I would put both of them, of course, but if I had to choose just one, I think I know which one I would want in my portfolio. But I'm more interested in which one you guys would have in your portfolio, or which one you already have in your portfolio. With that being said, comment section down below. Let the good doc know. Doc Talk Stocks, ladies and gentlemen. Make sure you get the likes up. Make sure you subscribe. Definitely make sure you get your stocks up, ladies and gentlemen. This is the year for us to become what we always thought we would be. Let's go ahead and build that wealth like we damn well should. All right, ladies and gentlemen, you take care. Stay blessed. Stay true. Doc is out.